The financial civilization itself is also undergoing mutation and development, especially in the past years, where the world's finance has been changing and unpredictable against the backdrop of the lingering capital. Financial civilization is increasingly showing its power. First of all, financial civilization gradually transcends industrial civilization, and its laws are completely different from the law of value of industrial civilization. When financial civilization knocks at the door, many people familiar with the laws of traditional industrial civilization are realize later and use the wrong rules of industrial civilization to calculate. The result missed out on the benefits bestowed by financial civilization. LTCM, a hedge fund company managed by Nobel laureates who are proficient in the most complex risk products and models, fell on the eve of financial civilization, and billion arbitrage funds were wiped out. When the British Chancellor of the Exchequer was about to rise in the price of gold, he mistakenly estimated the situation and left more than half of Britain's gold reserve at the lowest point in years, which caused the British government to lose at least £1 billion, leading the Parliament to ask him to settle accounts in the autumn. Secondly, financial civilization has high requirements for the quality of other civilizations grafted onto it. If they can match each other, it will have a significant amplification effect on the achievements of other civilizations. Otherwise, reverse results will occur. Former British Prime Minister Thatcher keenly seized the key to the financial explosion and implemented a major transformation of the securities market, creating a new City of London and ushering in a new era of British finance. On the contrary, the Japanese version of the financial explosion backfired, not only failing to unleash vitality in Japanese finance, but also plunging it into numerous crises. The root cause is a lack of understanding of the special laws of financial civilization. Currently, a new wave of financial civilization is quietly hitting the Asian coast. But the panic of the financial crisis, these old experiences have deeply rooted in people's hearts, making people from all walks of life afraid of what is about to happen. Southeast Asian countries that have experienced the financial crisis are typical representatives, and they have strong vigilance against the current global liquidity surplus and asset price rise. Many countries have already started deploying in late and early such as Vietnam, the Philippines, Thailand, India, etc., which have strengthened financial regulations in advance, in order to mitigate the risk of capital flight. Thailand even resorted to government intervention, which was counterproductive, while opposition to free currency floating suddenly, and is accustomed to using the laws of industrial civilization and information civilization to explain, study and judge financial problems. The development of the securities market according to geometric series conforms to the laws of financial civilization, but meets the logic of industrial civilization regulation and intervention according to the development of arithmetic progression. The so-called P/E ratio, securitization rate and valuation model in the inherent knowledge system have been repeatedly denied by the market. but they are still regarded as the 四无苏 being conservative towards traditional knowledge and unable to understand the arrival of a new civilization may result in schizophrenia. Integrating and responding to the four civilizations in a timely manner will lead to a winner-take-all in the market. Resignation, elopement of publicly raised funds, exposure of sweatshop, and the spread of migrant labor shortage have become the external manifestations of the labor price crisis. It seems that the crisis in factor prices has arrived early. Coal, electricity, and the prices of resource goods such as oil, gas, water, land, and production factors such as labor are becoming increasingly uncontrollable, forcing prices to enter a second round of breakthroughs. On the one hand, China's production factors are already low, with industrial electricity prices only accounting for 4% of developed countries such as Japan and Italy, urban water prices only accounting for of international water prices. Labor productivity equivalent 2% of the X, but wages only %. Globalization has inherent driving forces for domestic production factor prices to align. On the other hand, according to Citigroup's latest conservative estimate, the overall cost savings of industrial enterprises due to price distortions were approximately trillion yuan, accounting for nearly % of GDP. The cost of production factors is artificially suppressed. Not only does it not reflect the true cost, but also artificially overestimates profits. Some scholars estimate that domestic enterprises will unreasonably save at least % of production costs as a result, assuming that the enterprises themselves absorb % of this product. Prices will also increase by at least %. Therefore, the market's reconfirmation of production factor prices is an insurmountable barrier. In fact, if prices are distorted, they should be reformed. But the reform of the price mechanism is hesitant. Reform faces difficulties and the inability to rationalize prices. The essence of price crises reflects the crisis of reform, and the inability to promote reform lies in ideology. If there is a problem with ideology, it is a crisis of ideology. Our country is a country with several levels of civilization and several days of complex IT, which cannot be compared to other countries. However, with knowledge at its peak and a superficial grasp of complex situations, using classical Western theories and thinking and methods under agricultural civilization to respond will undoubtedly encounter bottlenecks, making reform difficult. Therefore, the ultimate solution to the price crisis lies in the renewal of ideas. It may be a necessary condition for emancipating the mind to subvert cognitive inertia and the old truth standards with the idea of post-industrialization or even financialization. Even if we can keep up with the times in our thinking, the path of institutional reform remains bumpy. Not to mention the resistance of some special interest groups to reform. The living pressure brought by global inflation alone has made it difficult to reconfirm the prices of production factors, let alone the fact that price reform is now facing two major. The financial crisis has not yet bottomed out, but no one mentions currency wars anymore, as they are considered war dollars in the book. The murderous and behind-the-scenes Wall Street tycoons died before they got out, while most of the survivors sold themselves to the government, were denationalized, and even did transsexual surgery to return to the bank to survive. The expected market of painful shearing by the crisis did not happen, which made people obsessed with explaining the financial crisis with conspiracy theory very frustrated. Did investment banks die of mass suicide? Just as currency war itself is a specious rumor strung together with bizarre conspiracies, even such a book is rumored to be a copycat version because the original version comes from the United States. However, the views in the book perfectly match the needs of those who have suffered heavy losses due to misjudgment of the situation, as dressing themselves as victims of uncertainty is more likely to gain sympathy. Therefore, as soon as this book was published, it was highly sought after and appeared at high-level financial seminars, serving as a shield against pressure. However, with the passage of time, the currency war has no effect on the overall situation, and it is still not eloquent enough to be used for casual conversation after meals. The essence of the financial crisis is money surplus, but in the conspiracy theory, money can be controlled unilaterally and completely. The 6 major families behind the U.S. government and the Federal Reserve control the situation, using cunning tactics to influence currency flows and earn large amounts of money, in order to achieve their goals by killing people and de-Buddha. However, the most fatal flaw of this logic is that the government and the 6 major families do not have the control they expected. They may have controlled the currency within the banking system. Once the currency flows out, it is not only difficult to track but also repeatedly transforms into capital and hot money. What is even more terrifying is that during this process the scale of the currency continues to expand. The expansion ability continues to improve, and speculative models are extensively replicated, creating a vast amount of money, book assets or liabilities registered on the balance sheets of financial institutions are in reality dependent on the price of resources and assets. The contradiction between the leveraged expansion of monetary capital and the limitation of the price rise of assets and resources will automatically close positions under the law of value. Obviously, this is the original sin of self-expansion and self-evaporation in finance. So on the one hand, the runaway of currency falsify the possibility of a holistic and long-term monetary conspiracy. On the other hand, the automatic liquidation of currency has falsified the possibility of a century-long and shocking conspiracy. Of course, it is not ruled out exchange members holding exchange member stocks, and all financial institutions can participate in securities trading issues activities. Abolish various financial investment regulations, and banks began to provide comprehensive financial services, including securities business. In OMS of regulation, the Bank of England has transferred the regulatory function of the banking industry to the Financial Services Authority of the UK. The financial Big Bang in the UK completely destroyed the financial division of the UK and Commonwealth countries and promoted the integration of merchant bank business and stockbroking business, as well as the integration of commercial banks and investment banks. Commercial banks in the UK have successively acquired and merged securities brokers, gradually emerging a group of super financial institutions, covering various fields such as banking, securities, insurance, trusts, etc., becoming a versatile financial group similar to Germany. Just as the Thatcher Revolution triggered a wave of global market-oriented reforms, the City of London's finance exploded. The explosion triggered a global wave of financial liberalization. Japan Tokyo financial explosion. Japan's financial liberalization reform directly refers to the sample of the UK which is called the Tokyo Financial Big Bang. This is short. The Hashimoto Cabinet of Japan was launched on July with the core of promoting financial liberalization by relaxing financial regulations. The main legal basis of the Tokyo financial explosion is the Foreign Exchange Control Law and the Bank of Japan Law. The main content is that Japan will relax foreign exchange trading restrictions and the venues for foreign exchange trading are not limited to licensed banks, and even supermarkets can engage in currency exchange. Japan's financial industry is officially moving towards free competition. Interests of people be respected, rather than being a broad concept. The difficulty of transforming this concept lies in encountering the resistance of traditional ideology and the covert boycott of vested interest groups. Another prerequisite is the upgrade of the governance concept. That is, the upgrade of the version of making decisions for the people, which is undertaken by everyone, upgrading from limited liability to a limited and bounded management model that leads social rules and maintains their fair execution. Previously, the direct participation of the state in the operation of the economy inevitably led to self-interest, resulting in impure motives for the state. However, when the state is above economic interests and only serves as the creator and maintainer of the system, the transformation of its role creates a natural demand for the principles of fairness and justice. The controversial labor contract law, to some extent, is a manifestation of the shift in national motivation from favoring enterprises to providing universal coverage for the interests of workers. It is a transition from a focus on efficiency first to a balance between fairness. Despite its poor timing, it is still a landmark milestone, because the more a few people resist, the more they can reflect that it actually represents the interests of the majority and touches the pain points of interest groups. At present, it is the Ministry of Power that undermines the principles of fairness and justice, distorts the state's motives seriously, and causes even greater public discontent. The phenomenon of door-oriented, departmental interest-oriented, and interest group-oriented. Many authorities use the name of the state to harm the people and enrich the private sector, and practice monopoly under the guise of maintaining fairness and justice. This distorts the essence and core of the national political system. which means that the state represents the interests of the entire society and the nation, and implements its representation through various state machines. However, in reality, various state machines become representatives of the state and fulfill the interests of their own departments in the process of representation. This deviation is the source of social contradictions at this stage. The real reason for the large-scale mass incident in Wengan County, Guangzhou, is that the government has repeatedly violated the interests of the masses in mineral resources development, resettlement, building demolition and other work, and in the process of handling conflicts, disputes and mass incidents. Some cadres have a rough style, simple working methods and random use of police force. Although the stock market was in a mess in the first half of the year, there were still over billion yuan in stamp duty receipts, and local state-owned asset management commissions are still preparing to queue up local state-owned enterprises, risks and opportunities. Numerous lessons have proved that this cannot be solved by improving management technology. In addition, from the subprime mortgage crisis to the financial crisis, it is not only the result of regulatory indulgence or absence, but also financial derivatives. The essence of the game of beating drums and passing flowers that requires continuous takeover is determined. Financial derivatives can indeed trade, hedge, and transfer risks. But whether it's futures and options, various credit default swaps, CDS, no matter how ingenious and complex the design, it can't change the fact of their zero-sum game. The problem with subprime loans is that in Europe and Asia, one is due to conservative traditional practices and the other is due to learning from mistakes. Except for a few institutions involved both domestically and internationally, the majority of transactions still occur between financial institutions in the United States. Once economic fundamentals such as real estate are reversed and transmitted to the financial market, and once there are no major players outside the financial system to pay, well, Wall Street can only digest them. More importantly, since the essence of derivatives is to evaporate for risk avoidance and regulation, it also surpasses constraints imposed by current trading methods. In fact, rather than Greenspan's neoliberalism causing investment banks to greedily and continuously amplify leverage like gamblers with leverage ratios of over times for Bear Stearns, Lehman, and Merrill Lynch, which means their liabilities per dollar of assets reach over dollar. It is more like being caught by the explosive development of global virtual financial markets. I believe that continuous innovation in financial instruments can provide conditions for creating continuous hotspots, allowing currency flows to flow continuously between various virtual financial markets without damaging the real economy. But now that the financial crisis has erupted and Wall Street is facing the return of the Keynesian ghost, the U.S. government has not only managed to Fannie Mae and American International Group have also issued an billion yuan rescue plan with twists and turns, and strengthened supervision over the only two major investment banks by incorporating them into commercial banks. Does this mean the convergence of financial leverage and Google's judgment is absurd? From the perspective of the disposal method of non-performing assets after major evaporation, it is highly likely that the soup will change without changing the dressing, which is still the Wall Street style.